Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. I would like to request my viewers to subscribe the channel and to see the playlist section of the channel where I have uploaded lectures on different chapters of accounts, costing, financial management and management accounting. Today I am going to discuss a problem on cost sheet. I would like to request my students to copy the problem and to see the way I have solved the problem. If you have any doubt, you can contact me through email which I have given in the description box. Please give your valuable feedback so that I can develop the channel for the benefits of the students of commerce. The following data are available for 2020. Production 50,000 units, material consumed 75,000. Direct wages 50,000, variable production overhead 1 lakh, variable selling overhead 2 lakh, fixed expenses 75,000, selling price per unit rupees 12. It is expected that in 2021 production will be 1 lakh units. Prices of material will go up by 33 1/3%. Variable selling overhead and fixed expenses will rise by 25% and rupees 25,000 respectively. What would be the cost per unit and selling price in 2021 if it is desired to maintain the same rate of profit on sales as in 2020? This is a very nice problem, and in this type of problem we have to prepare the cost sheet for the year 2020 and then we have to prepare the expected cost sheet for the year 2021, and this is a practical problem. So in the first page I am preparing the cost sheet for the year 2020, and the production is given as 50,000 units. So here I am writing the total cost and the cost per unit. So it is given in the question that the material consumed is 75,000. So what is the cost per unit? This is rupees 75,000 divided by 50,000 units. So this is 1.50. Next is wages. So direct wages. So direct wages is given as 50,000. So what is the cost per unit? This will be 1 rupee. Rupees 50,000 by 50,000 unit. So if we add up these two, we will get the prime cost. So prime cost is 1,25,000 and cost per unit is 2.50. Then we have to add up the variable production overhead. So what is the variable production overhead? Amount is given as rupees 1 lakh. And what is the cost per unit? This will be 2 rupees, because rupees 1 lakh divided by 50,000 unit, you will get rupees 2. So this is works cost. Works cost is calculated at 2,25,000 and per unit cost is 4.50. Now we have to add up the variable selling overhead. Variable selling overhead. It is given in the question that variable selling overhead is rupees 2 lakh. So the variable selling overhead per unit will be rupees 4. Rupees 2 lakh by 50,000. So then you have to add up the fixed expense. In the question it is given the fixed expense to be 75,000 and per unit cost will be 1.50, that is rupees 75,000 by 50,000. So if you add up with the works cost, the selling expenses, you will get the cost of sales. And cost of sales is rupees 5 lakh. And the per unit cost is rupees 10. It is given in the question that sales figure is rupees 6 lakh. Because selling price per unit is rupees 12. So if you multiply 50,000 into 12, you will get rupees 6 lakh. So sales is rupees 6 lakh. And the difference of the sales figure minus cost of sales is the amount of profit, which I am writing it as balancing figure. So your profit is rupees 1 lakh and per unit profit is rupees 2. So this is the cost sheet for the year 2020 in one screen. And here you have to calculate the profit as a percentage of sale. So you will get the same result if you calculate the profit as a percentage of cost, or since in the question it is given that you have to calculate the profit as a percentage of sales. So I am writing here profit as a percentage of sales. So here I am writing 1 lakh. This is the amount of profit divided by 6 lakh is the total amount of sales into 100. So you will get 16 2/3%. So if you calculate profit as a percentage of cost, you will get 20%. Now you have to prepare the cost sheet for the year 2021 based upon the information given. That is, the material cost will increase by 33 1/3%. Variable selling overhead will increase by 25% and the fixed expense will increase by rupees 25,000. So here I am preparing in the next sheet the cost sheet for the year 2021. Cost sheet for the year 2021. But in the year 2021, the expected production is 1 lakh unit. So here I am writing the cost per unit first and then the total cost. So material required. So in the year 2020, the material cost per unit we have calculated at 1.50. So in the year 2021, this will increase by 33 1/3%, means 133 1/3%. And you need to multiply it by 1 lakh to arrive at total material cost. So this will be rupees 2 and total material cost is rupees 2 lakh. That is 1.50, this will be 4/3 or 133%. 133 1/3%, this will be 4/3 or. So you will get rupees 2 per unit, the material cost, and the total material cost will be rupees 2 lakh because 2 into 1 lakh unit is the expected production in the year 2021. Next is the direct wages. So there is no change in the direct wages cost. So in the year 2020, we have calculated the direct wages at rupees 1 per unit. So in 2021, direct wages cost per unit will be rupee 1 and total wages will be rupees 1 lakh. 1 rupee per unit into 1 lakh will get 1 lakh. So the material or the prime cost, you will get rupees 3 and total cost, prime cost is rupees 3 lakh. Next, you have to add up the variable production overhead. in the year 2020, we have calculated variable production overhead per unit is rupees 2. So there is no change in the variable production overhead cost. So here I am writing rupees 2 per unit and the total cost will be 2 lakh. So works cost in the year 2021 per unit will be rupees 5 and the total works cost is rupees 5 lakh. Then you have to add up the variable selling overhead. Now it is given in the question that variable selling overhead will increase by 25%. We have calculated variable selling overhead per unit to be 4 rupees per unit. So here in the year 2021, this will be 4 into 125%, that is rupees 5 per unit. And the total variable selling overhead will be 5 lakh. It is given in the question that fixed expense will be increased by 25,000. So here in the year 2020, your fixed expense was 75,000. So in the year 2021, your fixed expense will be 1 lakh. I am writing here as rupees 1 lakh and the cost per unit is rupees 1 because you need to divide total fixed expense to be 1 lakh divided by 1 lakh unit. This is 1 lakh unit. And by adding the variable selling overhead and the fixed expense with the works cost, you will get cost of sales. Cost of sales is 11 rupee per unit and the total cost of sale is rupees 11 lakh. Now you have to calculate what will be the selling price per unit so that you will maintain the same level of profit as a percentage of sales. So in the year 2020, we have calculated the profit as a percentage of sales to be 16 2/3%. So here I will be doing a small working. So all of you know that cost plus profit is equal to sales. Now we have calculated the cost to be 11 lakh plus profit is 16 2/3% of sales is equal to sales, or 83 1/3% of sales is rupees 11 lakh, or sales is equal to 11 lakh divided by 83 1/3% is rupees 13 lakh 20,000. So here I am writing the sales to be 13 lakh 20,000 and the per unit selling price will be rupees 13 lakh 20,000 divided by 1 lakh units. So this is 13 rupees 20 paise and your profit per unit will be the balancing figure, and here I am writing as 2 rupees 20 paise and total profit will be equal to 2 lakh 20,000. So this is the cost sheet for the year 2021 in one screen I am showing to you. So first I have written the material cost. The material cost will increase by 33 1/3% over the year 2020. So your total material cost will be rupees 2 lakh. And the per unit material cost I have calculated first to be 2. Because in the year 2020 it was 1.50 multiplied by 133 1/3% you will get rupees 2. There is no change in the direct wages cost. So in the year 2020 we have calculated the direct wages cost per unit to be rupee 1. So here I have written direct wages cost per unit to be rupee 1 and the total direct wages will be 1 lakh. So prime cost per unit is calculated at rupees 3 and total prime cost is rupees 3 lakh. Then we have added the variable production overhead. In the year 2020 we have calculated the variable production overhead to be rupees 2 per unit. So here I have just put that value of rupees 2 per unit and I have multiplied it by 1 lakh units of production that is expected in the year 2021. So total variable production overhead is calculated at rupees 2 lakh. So your works cost is rupees 5 per unit or rupees 5 lakh total works cost. Then we have added the variable selling overhead, and in the year 2021 your variable selling overhead is increased by 25%. In the year 2020 we have calculated the variable selling overhead at rupees 4 per unit. So the variable selling overhead in the year 2021 will be rupees 5, because 4 into 125% is rupees 5. And then the fixed expense is increased by rupees 25,000. So total fixed expense is at rupees 1 lakh. That is 75,000 plus 25,000, you will get 1 lakh. So cost of sales we have calculated at rupees 11 per unit or rupees 11 lakh in total. It is given in the question that in the year 2021 you have to calculate the selling price per unit, so that you have to maintain the same level of profit as a percentage of sales. So for that purpose I have done a small working, and all of you know that cost plus profit is equal to sales. So cost figure we have already calculated at rupees 11 lakh, and the profit as a percentage of sales is 16 to 30%. And we have calculated the sales to be rupees 13 lakh 20,000, and the cost and the selling price per unit will be rupees 13 lakh 20,000 divided by 1 lakh is 13 rupees 20%. So the profit per unit will be the balancing figure, that is rupees 2.20, and the total profit is, or expected profit rather, is 2 lakh 20,000. This is a practical problem. Actually, when we prepare the cost sheet, this is the process that we have to adopt. I expect that all of you have been able to understand the solution of the problem clearly. If you have any doubt, you can contact with me through the email which is given there in the description box. Thank you. Thanks for watching the lecture.